This is the Rich Dad StockCast with Andy Tanner, the show that kicks 401ks in the asphalt and teaches you to be the master of your own stock investing domain. And here's your host, Greg Arthur.
All right, welcome to Rich Dad StockCast. This show's going to be a little broad, but then we're going to bring who am I kidding? Andy Tanner is going to bring it down to some strategies and some action items you can do. The title of this episode is How to Invest with No Money. How is that not the coolest? But the way we got this topic was due to Mr. Robert Kiyosaki. Maybe you've heard of him. As many of you may or may not know, Robert gets asked the same question every single day. And that question is, I have $10,000. What should I do with it? Robert hates that question because before he could even begin to answer that, he'd have to know your financial situation, your risk tolerance, your level of education, what your skills and interests are, and so many other things. So the question makes him mad because it's a lazy question. People just want to know what Robert's doing so that they can copy. But do you really think they have the same knowledge Robert has to get out of a deal or get into a deal or mitigate risk like Robert does? It's not realistic. But the other day he answered that very question in a way I'd never heard. He said, why would you use your $10,000? Why wouldn't you learn to invest with no money? That's what the rich do. You are thinking like a poor person. You're thinking like my poor dad. And I've heard Robert answer that question. He'd never answer that way. So it totally surprised me. And it kind of knocked me off my mental feet because here's a little confession for you. I think like the guy that asked that question. I think about what Robert calls the easy or the lazy way of investing when I should be learning how to invest like the rich. So today's show is called How to Invest with No Money. And we have Andy, I'm not going to do that to you. We probably have the number one person in the world to teach us, Andy Tanner. So Andy, welcome to the show.
Thanks, Greg. Every time you introduce me, I think when I die, I want you speaking because you're too nice to me. That's probably
too funny. I was going to say you're the greatest ever, but you get so mad at me when I puff it up. So probably the greatest ever.
I even feel embarrassed saying you might speak my funeral because I guess I'm being presumptuous that people would show. But I'm grateful.
I'll be there, Andy.
I'm grateful for our friendship, man. It's really fun to get together each week, and as we've seen more and more people give us feedback on these broadcasts, it does my heart good to feel like we're helping some people out with at least some things to think about. So I'm honored.
That's what I was gonna say. Well, you're helping a lot of people. So the comments say that. So thank you.
This is one of the best topics that we could choose. And one of the things that, Robert gets a lot of flack for is he starts with the big picture and context where people are hungry for content. And we often use the glass of water as the analogy here is people are thirsty. And so they're thinking water, but without a glass, it doesn't work. Of course, an empty glass doesn't help you either. So a person must have context and content, but there is an order, is you get the glass first and then you fill it with water. So to me, the importance of context has to do with order. So let's set some context maybe for the first half. Then the second half, we'll do content. We'll give them great, people get both. How about that?
All right.
That work?
Do it.
The rich invest as if they had no money. If you might have heard this, I don't know if it's true, but I think I tend to believe it would be. They say if you took all the money from the rich people like, Buffett and Kenny and Robert and all these rich guys, and you were to distribute that wealth amongst the people, wait 5 or 10 years and be right back in the same hands. And that's starting at zero. I mean, that's Warren Buffett stripped of his clothing, naked, not an asset in the world, only his brain. Would he become wealthy again or would he fail? And that's a really important thing for us to think about politically right now is where does money come from? It comes from who you are. It doesn't come from policies. It doesn't come from other people deciding it. No matter, who. I like what Buffett said. He said, I've invested over half the time under a president that I didn't vote for. Oh, and cool. he said, I've just continued to do what I do and it doesn't affect what I do very much. So the question next would be, well, why is that then? What does that look like? So the key word we start with is, if you want to do a lot with a little, before we do everything with nothing, how do you do a lot with a little? And that's called leverage. Leverage is when I move something very, very heavy with very little effort. So let's start with what it looks like for someone like Kenny McElroy. And let's look at how his business philosophy works in real estate, because I think if we understand real estate, then we can bring it over to stock and it'll make a little bit more sense. Okay.
So Ken McElroy is the Rich Dad real estate advisor.
Yes.
And I believe he's the largest multifamily owner, investor, I'm not sure the word there, in the Southwest. So he is huge.
Yeah. I mean, I don't know how many thousands and thousands of doors he has. I think it's north of 10,000 doors, I'd imagine. Projects all over the country, very successful and just a great guy. Probably, I always ask my kids who the smartest advisor is. They say, Kenny, that quick. I go, who's next? Tom, that quick, so. But the way Kenny does is, when you look at buying a home, you usually have a down payment, maybe 20, 25%, and then 75% is from a bank. So out of the gate, you're 75% of the way there just by using other people's money. Where the work comes in is if you can borrow the down payment from private investors. And if you read Kenny's books, this can be done on a grand scale, like he does with multi-million dollar project. Like he can do a $50 million project and have, 75% of money from a bank and 25% money from private investors. And there's enough value for the tenant in there, for the rent, to pay both payments. And Kenny doesn't use any of his own money to do that. He uses banks and private investors. So his business is set up. Think about that for a minute. His business is set up to operate by it was designed from day one to never use his own money. And that might give insight to people as to why, because think about how profound this is. Kenny is investing as if he had no money. In other words, his process, having hundreds of millions of dollars in his pocket, as opposed to having no money in his pocket, is the same. So I'm going to say it again to kind of drum that into people's minds. The rich invest as if they had no money. Kenny's systems are not dependent on his money. He's designed it to where, so it makes sense now. If you took Kenny's money and spread it around, he started with nothing, he would simply do the same things as a poor person that he's doing as a rich person, because why would a rich person not want to, even if he had the money to put in, if he doesn't have to, the return is greater.
So I do want to make this point, though. He may not have used money, but he still did use assets. And those assets would be his knowledge, his experience, his success.
Yeah, people talk about OPM, other people's money. In my book, I don't know if I coined this phrase. I think I did. Maybe it was in my subconscious from somewhere else, but I call it OPE, not OPM. I call it other people's education, other people's experience, other people's effort, other people's expertise, other people's everything, including their money. And Kenny has a team and he does that. It's other people's everything. He's simply a leader.
Right.
So that's an example of someone who is rich, who does not use his own money. And that's where when people say it takes money to make money, he says, no, it doesn't. It takes, I don't need any. And number two, even if you had money, it wouldn't make sense to use it. And the other thing that's interesting is Kenny's risk is his reputation, not his money. He still takes risk.
Right.
But if everything were to fail, the bank would lose and these investors would lose, and he would lose by reputation, which his reputation is impeccable. So it's like Buffett said, lose money, I'll be understanding. Damage reputation, I will be ruthless.
That's fair. Let me ask you this, though. So our listeners probably don't have Kenny's reputation experience. Do you mind? I was reading your book. I think it's actually called How to Invest with No Money.
Yeah, I have a little ebook called How the Rich Invest with No Money.
Okay. You told the story of Mark Cuban and how he started out. And that, to me, that might be more relevant to our listener, because it's not the Ken McElroy, I'm already successful, so I can keep doing it.
Well, Mark Cuban didn't borrow money. Mark Cuban gave people equity. I've done the same thing. Now, I have some businesses that have been successful and businesses that have failed, but I did the same thing. For example, let's look at the business people know. I'm in the education business. I'm in the book business, right? I write and I teach. Both those businesses were started with zero money. And what I did, and I've done this with businesses that failed too, but I've gotten great partnerships out of it, is instead of borrowing money from other people, you were generous and you shared. And you said, I have a great idea. I have a great system. I have a way to give value, but I can't do it myself. Tell you what, I'll share the profits with you if you'll come on board. I don't want your money, but I want your talent. And I've started several businesses that way. Ironically, I've started other businesses where I've put a lot of money in and lost it all. So I would say that today, when it comes to business, it's easier to start with no money than ever before, or at least minimal money.
But let me,
then we'll get the stock.
I feel we glossed over the one part, and that is before you started your business, you got your education.
Yes.
And then you also had leadership skills, because if you get the best team, it doesn't really matter if you can't lead them.
And I would say my leadership skills are even, I didn't have to be a great leader. My leadership skills are probably mediocre, but my business partner has even better leadership skills than I did. I even outsourced those, cool. Which makes me a leader that brought on a better leader.
Right. That's cool. All right. But so how do you bring this down to stocks?
But to your point, not to gloss over that, Mark Cuban did the same thing. When he sold broadcast.com to Yahoo for $6 billion in stock or whatever it was, he made a lot of other people very, very wealthy because they were the people that came early on where he said, I'm not going to borrow your money. I'm going to borrow your talent, or I'm going to use your talent. I'm going to give you equity. And
he even did the same thing. He went first and worked for basically a competitor, became one of their top salesmen. So he learned the ins and outs of that business. He didn't know how to code. He didn't know how to do the actual, I don't know, work or whatever.
It was OPE.
But he met the people that could, like,
and organized,
gave them a share of his business.
Yep.
Sold them on the concept of it. So first he got educated. Then he found the team, sold the team on the concept. I think the key word also was he shared. He wasn't greedy, and he's a billionaire.
In both cases,
that's the story that started out with no money.
In both the cases, the idea wasn't focused on the money. And even in Kenny's case, it's focused on the value. If you know how to give value, that's what entrepreneurship is. If you solve someone's problems, have value, you have a good idea, you have a good BI triangle. What you have to understand is there's two types of money problems. There's not having any, and then there's also having too much. Robert has too much money. And what I mean by that is he's called me before. He says, Andy, what do you think of the price of silver right now? I says, why? He says, well, Kenny just gave me back, maybe $3 or $4 million or $5 million or whatever it is. I got nowhere to put it. Savings, I know that inflation kills my savings account. I need to get this money out working. So there are billions of dollars out there trying to find a home. That's why Kenny can raise money in an email or a phone call saying, hey, I have a new project. And people are like, me, pick me. He can raise $100 million in 5 minutes. Why? Because people want investments. And if you can be the person that finds those and leads those, you're there. Now, let's talk stock.
Okay.
I'm going to start right now when someone says, well, yeah, it takes money to make money in stock. Yes, it does. So right there, you're not going to get to zero in stock. Okay. But if you look at funding everything yourself at 100% of your own money, and then the leverage of a margin account, maybe 50% of your own money, and then you go down and start leveraging, options, you can get down to maybe instead of spending $100, you spend $1. That's not zero, but it's in the ballpark.
That's darn close.
And you get to do this with no leadership skills. In other words, you won't have to sell anything. You won't have to make an agreement with anybody, and you will not be borrowing any money because we're talking about a third type of leverage. The first type of leverage was borrowing. That's Kenny. The second type of leverage was sharing. That's equity. That's Mark Cuban, right? And the third type of leverage is by contract. And that's why options are so important. Maybe a stock is $100, but the call option might be $1. And so what I do is I like to find with my son a scale of this. Without getting too technical, options are pretty cool. I'll give you an example. One of the trades that we do with my son is Berkshire Hathaway. Now, that's for a 14-year-old kid, that's 200 and change stock, 209 or whatever it is, $215. I don't know where it'll be by the time this recording is released.
Right. But
to buy 100 shares, that's $20,000 for a 14-year-old kid. But what I did with my son is we did what's called a calendar spread, where we bought some long-term options for a tenth of that. So now you're talking a couple grand, and then we sell options for cash flow. So we didn't do it with no money, but we drastically dropped it. And what you'll find is the more education you have, the closer to zero you will get if you begin to combine all of these things with your margin account and other stuff. But I will tell you the best example of making money with stocks with no money at all is a 401k. If you sell someone a 401k, you have absolutely no money in the deal and absolutely no risk in the deal. Correct?
You might go straight to hell, though.
Well, it depends on your reputation. I think that one of the things that I really enjoy about being a teacher is there's a lot of satisfaction when people find a skill they didn't know they had. I'll give you two little examples, maybe a quick story. I think one of my favorite students ever is a lady named Donna. And it was way back in the day where it was before I even had my own education company. And, I was out there pitching some software and, pitching something and, as a speaker. And it was like a couple $1,000 to get involved. And she came up to me after, she goes, "I want your home phone number." If I'm going to go over this, I said, "Yeah, here it is. Here's my home phone number. If you need help, call me." And she just took off. She just blossomed. And she got better at it than I was. She passed the teacher very, very quickly, much like Corey Halliday and other people on my team. She's got better at it than I did. And what she found is she found a talent she didn't know she had. She just was like a duck in water. She understood the numbers. She's like, I never in my wildest dreams imagined I'd be able to use this leverage to do this. Well, once a person gets to that point, if you can start serving other people, there's nothing wrong with aspirations of using your stocks trading skills the same way Kenny does. Look, what is Kenny really doing? He is acquiring assets for people. You got to understand, those people that loan him money, he also gives them equity. Sometimes he does a loan, sometimes it's equity. I like Kenny because he shares and gives equity, like Mark Cuban. And sometimes, he'll control it and sell it and give them all their money back so they don't have control. In that way, it's kind of a loan, but right. While they have it, they do have equity, and he pays a distribution. If a person's really good at investing and good at trading stock, what a blessing to start your fund. You look at, I'm not going to name any names because I don't want to endorse people, but there's many, many funds. Think about how much money Warren Buffett's made people. Think about the money Jim Simons has made people. Simons has made people. And so that's another way you can do this with paper assets, is if you know how to do it. I have people emailing me. I haven't played that game yet, but I have people emailing me that barely know me and say, I had an email the other day. A guy says, "Andy, I've got $1 million. I don't know what to do with. Would you invest it for me?" Well, that's a way to invest with no money. I decline that because I'd rather be a teacher, but that's another way you can do it. So as you learn leverage, you can get it down to zero in one way or another. And that's the way rich people think.
I also have a son, and I told him that if he starts paper trading and he shows me that he can turn my money into a profit, that I would be his backer. So I think that once you do prove that you can be successful in something, finding a backer is not impossible.
That's the real thing, Greg, is that mindset of it takes money to make money. And the reason I'm poor is I don't have seed capital to start with. It's just a myth. It is very easy. It would be very easy for me to raise money. Very, very easy. I don't even raise money. People offer it to me. Right. It's the ability to perform that makes Kenny so special. I know his investors are so excited. And as soon as you give someone a return one time, they are begging to give that money back, because this is really important. Rich people don't want cash. Rich people want assets and investments. And the moment you give them cash, so poor people are pursuing cash by going to a job. Rich people do not want cash. They want assets.
Yeah. Robert always says rich people don't work for money. Rich people work for assets.
People say, well, I want to get rich and I want to make a lot of money. That's absolutely not going to do it. I want to acquire a lot of assets. Oh, okay. Now you're on your way. Now you made a first step.
Right.
So the rich invest as if they have no money, and you can do that in real estate with debt or sharing equity, as Kenny does. You can do it business with debt and sharing equity, raising capital. You can do it stock with raising money, debt, equity, or the leverage of the options market. It doesn't get you quite to zero, but it can take you 90% of the way there and then compound out. It's really, look, if you had a choice between having $100,000 giving to you or Warren Buffett's mind, but you got no money to start with. I mean, that's not even a contest, right? You can, here, I'll give you $100,000. You can have Kenny's skills, but you don't get any money. You just get his knowledge and skills. Well, here's the good news. Kenny has several books. As a Rich Dad advisor, he says, well, I'll share that knowledge with you. That's not free. So you go to Amazon.com and you fork out, or wherever you go to get his book, and you fork out a couple bucks, and he'll give you everything he knows.
Well, let's not be too humble here. You also have your courses. I think in the description we'll put a link to it. You also have a book on Amazon, so you also share your knowledge.
The difference between my book and Kenny's book is mine has been rated higher than Kenny's as a sleep aid. And it's non-habit forming. So no, I'm grateful for the people who have read the book and had kind things to say. It's flattering. Greg, you and I are good friends, and you talk about the hope you have in life is that you can make a difference. And not everyone's going to agree with you all the time, and they'll poo-poo you if you put yourself out there. But it's worth any of the naysayers if you help a couple of people along the way. And growing up, one of my biggest fears, I'd never find what I was born to do, or find a way to teach, or a way to find a talent. And for some reason, we've been fortunate to be able to simplify things for people if they give us, more than 30 minutes of time to do it. And that's been a great blessing. So, and you're a big part of that. So thank you so much. I love this show. I love our time together every week. So thank you.
Me too, Andy. Thank you for joining us. You're always giving us so much knowledge, and seriously, take the time to read the comments. People are amazed at the knowledge you share. So thank you.
Thank you much. We'll see you guys next week.
All right. Thanks, man.